So I'm now going to hand over to Antony Manchester, Managing Director of UK Public Policy at BlackRock, who also chairs the IRSG Global Regulatory Coherence Standing Committee. Antony, can I hand over to you to present the new report, please? Thank you.
Thank you, Katharine, and thank you very much, Dietrich, for your insightful remarks. And it's really useful to hear you share the FSB's perspective going forwards. As Katharine said, it's a pleasure now for me to give you an overview of the International Regulatory Strategy Group's report on global solutions for global problems, which has been overseen by our working group on global coherence, made up of practitioners from across the financial and related professional services ecosystem. The reason we embarked on this report wasn't so much that we see major problems in the international regulatory environment at the moment, rather to take stock and renew the commitments that were so successful in ensuring an internationally coherent response to the global financial crisis, which is over a decade ago now. And if I could move over to the next slide, please. I think it's worth bearing in mind that back then in Pittsburgh in 2009, G20 leaders made a commitment to take action at the national and international level to raise standards together so that our national authorities implement global standards consistently and in a way that ensures a level playing field and avoids fragmentation of markets and protectionism and regulatory arbitrage. In order to renew that commitment, we've identified 6 principles that we think are necessary for policymakers to follow when addressing international problems. And Patrick, if I could have the next slide, please. The first of these is around cooperation. And it's the regulation of industries and firms that operate across borders is best achieved through regulatory and supervisory cooperation and coordination. And that's essential, but it's not all that's necessary. To make that work, you need communication. And policymakers and supervisors can benefit from mutual exchanges of information and insights as financial services evolve and supervisory practices are refined. This needn't be, and I think it's important to stress this now, particularly at this juncture in the UK's relationship with the EU, this needn't be limited to set-piece events or formal dialogues, but ongoing through strong working relationships between professionals. Thirdly, transparency. This is essential to promote trust and underpin the communication and cooperation that's necessary for policymakers to work with each other effectively. And it would be good to see what for international organizations and standard setters should continue to work towards greater transparency and openness where possible. Next, innovation. Given technological developments, regulation and supervision are evolving disciplines requiring ongoing consideration of best practice, risk-based approaches and areas of improvement. It's great if regulators can share their innovations with each other and can learn from each other and together move forwards to enhance these new technologies to make regulation better. Consultation and the impact of evaluation of essential aspects of good policy formulation and regulation too. It's important that going forwards, regulators and the industry work together on approaches, working out what's best and avoiding unintended consequences. And finally, resourcing. The resourcing of financial supervisors should consider the need for international cooperation and coordination and shouldn't just be an add-on. This is going to be essential if people are to build once the pandemic has passed, of course, are going to be able to travel and build the relationships necessary to build the trust and channels of communication that they are needed to ensure successful collaboration. Of course, in addition to these 6 principles, and in order to make international regulatory coherence a reality, there has to be a will to make it work in the first place. And that is why we think now is a good time to renew those commitments. And indeed, this is exactly what Japan started to do during its G20 presidency in 2019. And we look forward to hearing from Toshiyuki Miyoshi later on in the program about his government's work in this area. This is essential because, as IOSCO has noted in the past, the costs of fragmentation are many and include pools of liquidity not being large enough to offer market participants value for money. It can interrupt cross-border flows that would otherwise meet demand. And corporates and individuals therefore face higher costs. And finally, the scope for regulatory arbitrage is expanded. And it's important to do this now because we're now entering a delicate time for the cause of regulatory adherence, to be honest. The COVID crisis already came at a time when commitments to international trade were being questioned and support for globalization was on the way. It follows Brexit, probably the single biggest act of fragmentation in this part of the world, and it's left behind a political split, but one that straddles interdependencies in the economy on both sides. And as the global economic restart gets underway, calls to review supply chains, ensure operational resilience, and manage the challenges posed by new technologies and climate transition are at risk of being taken forward without due regard to the necessary successful international cooperation that we need if we're going to ensure that those attempts to address those problems work. Therefore, if I could move on to the next slide, please. We think now is a critical moment, therefore, and especially in light of the UK's G7 presidency, Italy's G20 presidency, and both countries' joint presidency of COP26, to restate the benefits of coherence. These are benefits for firms and their regulators, who otherwise face inconsistent requirements, generating cost and complexity, making it more difficult to identify risks. Benefits for financial stability of what is essentially a highly interconnected system. A call for coherent regulation, and I want to stress this, is not the same as a call for less or no regulation. The whole point is to manage the risks of contagion, but without incurring the costs of fragmentation. And then there are the benefits to economic growth of a predictable, well-regulated financial system that serves the needs of its users. And it is this that is the most important benefit of all, the benefit to end users, the clients we in the private sector serve, and the consumers in whose interests regulators and supervisors act. So it is for the benefit of end users that it is crucial that we move forward from the pandemic in a way that fosters international coherence. It is helpful then that the challenges we face now are also opportunities to revive that agenda. For example, quite rightly, many countries around the world, and not just here in the United Kingdom, are determined to build back better, and common approaches to disclosure and coherent definitions of sustainable investments will make it easier for the funds industry, for example, to marshal the savings of millions of people towards that aim. The pandemic has brought with it a huge increase in cybercrime, which increased fourfold in the UK alone in just the first few months of the lockdown, as so much economic activity shifted online. Only through international cooperation, common standards, and the sharing of intel can we identify the risks and tackle the perpetrators. And the same is true for financial crime, which not only doesn't respect borders, but actively exploits them to evade protection. Therefore, if I could move on to the next slide. Building on this work, we've therefore picked 3 recommendations that we think coordination and cooperation can help in the coming year reinvigorate the international agenda. The first is in the area of operational resilience, where policymakers are rightly keen to learn lessons from what worked so well and not so well when the pandemic hit. And we call on global regulators and standard setters in cooperation with national stakeholders to play a leading role by developing guidance and a set of standards to foster operational resilience of global supply chains within the financial services industry. Second, we want to encourage innovation in digital governance and believe governments and authorities can create, shape, and influence the global digital regulatory framework through regulatory and standard setting collaboration and information sharing in emerging areas. These include cybersecurity, data privacy, cross-border data transfers, financial technology, and developments in RegTech. This is essential to avoid regulatory fragmentation, promote an open and level playing field, and mitigate emerging digital security risks and vulnerabilities. Finally, and most importantly, in the run-up to the COP26 meeting, it's critical that we use international regulatory coherence to incentivize sustainable finance. International convergence of company sustainability and climate disclosure standards is essential to accelerate the net zero aligned investing. This will reduce the reporting burden on companies, and it will enable investors to make informed investment decisions backed by clear and consistent data. Momentum is already growing in this area. Last year, 5 leading standards setters announced they will work together to develop a comprehensive global corporate reporting system. And the IRF's foundation has come forward to create a sustainable standards board working towards further consistency and global comparability in sustainable reporting. This builds on the ongoing efforts undertaken by the private sector, and we believe that the UK can use its COP26 and G7 presidencies in collaboration with Italy and other partners to push for a global and united voice endorsing international convergence, urging other jurisdictions to accelerate companies' sustainability reporting using the TCFD framework and the metrics identified by the Sustainable Accounting Standards Board, or known as SASB. Moving on then to the next slide and to conclude. I think it's important to stress that there's nothing particularly new in much of what we've said. We know that the costs of fragmentation are many, while the benefits of coherence are potentially huge. But it's a delicate moment. We have to work together to get things right at this important juncture. On the one hand, the challenges the pandemic and climate change have posed could see the international consensus on regulatory coherence fragment, sending us down a path of incompatible and conflicting approaches that baffle businesses, confound regulators, and increase prices and reduce choice for end consumers. On the other hand, these challenges are also the opportunity for us to renew the spirit that guided policymakers in the aftermath of the financial crisis. And we strongly hope with this report that governments, regulators, and businesses everywhere will opt for this latter approach, making sure we have global solutions to global problems. Thank you very much.
Thank you very much for that, Antony. Thank you for running through the report's key findings and for that really important call on the international community to further global regulatory cooperation and coherence, despite the fragmentary pressures of this delicate time.